now it's finally time to take a look at one of, in my opinion at least, one of the best stochastic RSI strategies for beginners. And this right here is the stochastic RSI divergence. And this might look complicated, but don't worry, I will walk you through it in a step-by-step manner. And there are 4 main types of divergences that you need to learn. The first divergence is called bullish divergence. And what is this and how do we find a bullish divergence on the chart? Well, in order to find divergence, we need to look at both the price and the oscillator. And in this case, our oscillator is the stochastic RSI. So you can think about all of these blue lines as the stochastic RSI. And to be more precise, what I do is that I use the percentage D line for divergence. Here, for this, different traders will have different strategies. Some traders use percentage K, but I actually use, at least for the standard settings, I use percentage D, and I will talk more about that later. But you can think about this as, you know, the stochastic RSI, or to be more precise, the percentage D. But what are we looking out for when we're looking out for bullish divergence? Well, here we want the price to print consecutive lower lows, while the stochastic RSI prints higher lows. And here, and this is very important, when you look at bullish divergence, you only look at the lows. The same thing is true for hidden bullish divergence. We look at the lows here. We only look at the lows. And for bearish divergence, both the regular bearish divergence and the hidden, we only look at the highs. So if you take away anything from this, is that bullish divergence, you look at lows, bearish divergence, you look at highs. But as I said, the regular bullish divergence, or simply called bullish divergence, we're looking out for lower lows on the price, higher lows on the oscillator. This is a bullish divergence and indicates a reversal to the upside. The hidden bullish divergence, however, is different. Here we want higher lows on the price, right? Lower lows on the oscillator, and this is a signal. This is not a reversal because the price is already in an uptrend. This is a signal that indicates that the uptrend will continue, or in other words, it's a continuation signal. So both of these divergences, very important to learn. So yeah guys, if you want to, just pause the video and repeat this, you can go to a real life chart and practice also, and pause the video and come back later. But now, what about the bearish divergence? Well, this is what we just recently talked about, but pretty much the opposite. A regular bearish divergence is when we have higher highs on the price, lower highs on the oscillator, and this indicates a potential reversal to the downside. Once again, notice here that we are looking at the highs. We're looking at the highs of both the price and the stochastic RSI. For the hidden bearish divergence, we already are in a downtrend because we are already printing lower highs. But here we're looking out for higher highs on the stochastic RSI because this indicates a bearish continuation to the downside. So these are all of the divergences you need to know right now. Now let's switch the attention here and take a look at a real life example. So now it's finally time to take a look at the stochastic RSI divergence trading strategy. And the indicator you can see here, as I mentioned earlier, this is the stochastic RSI, but we can only see the percentage D line. And when we later on in this video, when we take a look at my special settings, you will learn why we have the percentage D right here. In simple terms, it's basically because when we use percentage K with the standard settings, it will reach the highest and lowest values pretty often, and divergences will be pretty hard to spot. So for the standard settings, I do actually prefer percentage D. I'm not saying that this is, the best way to do it, but this is just, in my opinion, it's much easier to find divergences using percentage D compared to percentage K. But if it works for you, definitely feel free to use percentage K. But now then, let's see if we can find any divergence here. So let's begin here by analyzing the lows. So here we have one low right here, right? And then we have a slightly lower low. But if you switch the attention to the stochastic RSI, you can see that we have one low and then a higher low. And when we have the price printing lower lows, while the stochastic RSI prints higher lows, what is this? Well, this right here is a regular bullish, right? This is a bullish divergence or bullish div, and this indicates a reversal to the upside. So very good job if you spotted this one. Let's analyze the charts further here. The price went up here, then we went down, and we pretty much printed a new low. So we have a, we have a higher low on the price. But what about the indicator? Well, we can see that it looks like the low of the indicator is around the same level here. So around the same level, maybe a tiny bit lower. And remember here, if this stochastic RSI was, even lower here, this would actually be a hidden bullish divergence indicating a continuation. And in this case, you can actually see that the price, we actually got one more push to the upside before the reversal. So this was a, not really a clear signal. One could argue that this was almost a signal, but not good enough, in my opinion. But now let's analyze the highs here instead. So here we have, one high, two high. This is pretty much two highs at the same level. We can think about this almost as one high. Then right here we print a lower high. You can see the high right here, also a high right here. So we can pretty much think about this as, one sort of high. So in this case, we have lower highs on the price, and we also have lower highs on the indicator. So we don't have a divergence. Same thing true. We have another high right here. So the price prints a higher high, and we once again have a higher high on the indicator. So far the indicator and the price have pretty much gone in the same direction. But if you look at the next high right here, you can see that now the price prints a higher high. But if we look down here to the stochastic RSI, we can see that the stochastic RSI actually prints a lower high. And do you remember what this is? Well, this right here is a regular bearish divergence, right? Or for short, bearish div. And this divergence indicates a reversal to the downside, and after the signal, the price completely collapse. Alright guys, so this video was actually just a very short clip from our full stochastic RSI course here on the channel. If you want to watch the full course, simply click or tap on the screen right here. I hope I will see you all over there very soon, but for now, take care. Ciao, ciao.